All right, everyone, so I'm going to take a look at an earnings calendar here, and this is what I've been teaching right now in the deep dive the deep dive calendars and diagonals course. This is going to be in Snapchat that announces earnings tonight. Now, one of the things that really draws me to Snapchat is look at how high this implied volatility is down here as opposed to the historical volatility. So that's a definite elevated volatility that is likely going to give us some backwardation. We're going to look at that in just a second and see exactly what that means. But if I come over to my trading platform and I look at shorting the current at the money, we're basically at $10 right now at the money put, those are going to sell for $1.07. I can buy a further output, and notice that I'm going a ways out. I'm going 21 days further out on this put, and I'm able to buy that for $1.19 which gives me the variance here of basically 11 cents. So that means that for $11 I can buy one of these calendars. So we can also see the IV here in the front period, 264 versus the back period, 112. This is a huge backwardation. And if you've taken, again, the deep dive calendars and diagonals course, you'll understand that backwardation is one of the key things that I look for. Also note that the reward to risk ratio is huge. We have a potential reward, not that we're shooting for this number up here, okay? We're not. But it is a measure of how good the reward to risk ratio is. So there's a reward of roughly, just shy, well, actually $900, and there's a risk of $120 on 10 of these. So I am going to go ahead, see if I can get into this trade, and then I'll put an order out there to close this trade at, I'll close a portion of it at probably around 30% profit, and then I'll set up the balance, to see about hopefully closing during the day tomorrow if this lands in my sweet spot. So I'm going to try on, I'm not going to try 10 cents. I won't get 10 cents, but I might get 11, so I will go out there, let 11 set there a little bit, and see if I get a fill. Let me go ahead and place this order. Now, the thing I don't like about earnings trades is sometimes the next morning they do require you to do a little bit of, I guess, what I'll call day trading. You may need to be present, and maybe not necessarily tomorrow, but with the options that expire on this Friday, sometime between now and Friday, if this trade does not go in your favor to where it closes quickly, there's going to have to be some management on this, and that bid-ask spread can get pretty wide if the market moves away from us a fair amount. I'm going to go ahead and change this order now to 12 cents, see if I can get my fill. And so that's the downside to these. But again, my max risk in the trade is essentially $12 per spread, assuming that I close it all on Friday. But again, my goal, if it goes against me, is going to be to maybe roll out these shorts, roll them out a week, see if I can take in some extra premium in that process. So I'm going to pause here until I get a fill, and then we'll update everyone. Okay, so I've got something here that's of a little bit of concern to me. I am willing to pay at this point, oh, there we go. I was going to say, I was willing to pay 13 cents for this. It was trading at 11 cents, and I was not getting filled. That's a little bit concerning, but it looks like I am filled now. And I like to come to the grid to see this, and I'll shrink down the image so that it's easy to see the full the full view here. Yeah, and you can see I'm showing a $20 loss or $10 loss. That's because I paid up for the position. I could have just let my order set there and waited to get a fill, and maybe I would have gotten filled at 11 cents. And if I did, then I'd be at break even here instead of down a little bit now. So what has to happen on this? Well, tomorrow I need to have this thing, the earnings, ideally not move this a great deal one way or the other. Now, it looks right now like my tent is quite wide, like the market could go down to 7.5 and, maybe even go up to 14. That is not accurate. What happens on these is that as the volatility of this front period and back period move around after the earnings announcement, that is going to dramatically impact the size of this tent. So both of these, the volatility in both of these is going to drop after the announcement, and people then know what the results are. Prior to that, there's a lot of anxiety, volatility is high, fear is high. After that announcement, what's going to happen is volatility is going to drop. Now, the key is, you can see as volatility drops here, we can see that tent starts to close in a bit. The key here is hopefully volatility is going to drop out of these way more than it drops out of these. Now, it's going to drop in both instances, but usually volatility will drop more in the closer strikes, the closer expiration strikes, than it does in the further out strikes. So that's what we're going to be looking for there, is hopefully that will be the type of drop that we will have. And if that is the case, then we're going to see our T0 line pop up into here somewhere rather quickly. So final step, I'm going to, well, actually I'll wait till tomorrow morning now, and I'll put an order out there to close this after we see where the market ends up. So that's it for today. I'll come back tomorrow and add the finale, if you will, on this trade and see what happens on it. All right, so here we are the next morning. Let's take a look at Snap, and we can see that it closed around here yesterday. It did shoot up quite a bit this morning. It's now pulling back a bit. So let's see how Snapchat is faring from a standpoint of profitability. So it's doing great. This trade is currently up right around a little less than 100%. And I'm going to go ahead and put out an order to just close this. Now, a case could be made for, playing with this thing and, shopping it and, maybe trying to squeeze a little more out of it possibly. But 92% in a few hours, not even a few hours, probably 30 minutes last night and then 10 minutes this morning. I'm just going to take the money and run. So I'm going to go ahead, put my order out there. And remember, I bought this for 8 cents. I'm going to see if I can go ahead and sell it for 25. And get that order out there. And let me show you exactly what transpired. Cancel an order, detected a problem, not sure what that's all about. So I'll circle back on that and get this thing closed. But let me show you how this happened, just so we're clear. So these are some screenshots from OptionStrat that I also use, and they're nice and bold, which I like, so it will help me in illustrating exactly what took place in this trade. So the thing I want you to note is when we put on this calendar yesterday, we sold our short strikes here, our front dated short strikes at 80 cents. We bought, we bought our back strikes for 84 cents. So we only paid 4 cents per to enter this trade. Really, really cheap. And that's because the volatility in our front strikes here was 289%. Volatility in the back strike was 158. That created what we call backwardation. Now, this morning, we go to close this. What has happened? Well, our short strikes here that we had sold for 80 cents are now only worth 9 cents. So we can buy these back for 9 cents. Great profit. Here, We bought these for 84 cents. Well, they have dropped in value as well. They've dropped quite a bit in value, but their drop in value, because they're further dated out, there is still value in those. That's what generates the profit in this trade. It is the dropping out of the value of our short strikes to a very low number, and then this number, our longs, did not drop as much, and that's where the profit in a calendar comes into play. So just thought I'd give a review or an overview of this trade to help everyone understand calendars and diagonals. As you may also know, I'm just launching my deep dive calendars and diagonals course. It's going to launch on November 1st. Anyone that purchases it prior to November 1st, there's a sizable discount. I'm going to put a link in the description down below, and there is about I think it's a little over an hour section specifically on using calendars to trade earnings. So that's in my opinion, calendars are probably one of the most forgiving trades to use for earnings trades. So if anyone has any questions, please make a note in the section below. Please like, subscribe, and if you're interested in knowing more about trading calendars in general or time spreads and specifically calendars around earnings, make sure you check out the course below. Take care, everyone.